At Real Estate America, we believe in not only providing buying and selling services to our customers, we believe in helping you stay in your home in times of difficulty. There is no need for you to feel helpless should you be falling behind on your mortgage. We can help you. There is some talk about dealing directly with your lender, but do you really have the time day after day to be on the telephone? You need to be out there making money. Lenders are out to protect lenders, not you. You need someone to present you in the best light so you can get the best terms possible when modifying your loan. We can restructure your existing loan by preparing a loan modification package that will better suit you regardless of how far behind you've fallen with your mortgage. Should that prove to be impractical, we have agents that specialize in short sales if your loan is higher than the property value. Another option is to submit your deed to the lender to avoid foreclosure. Special forbearance is also a possibility in some cases. And lastly, there is bankruptcy, should all the other avenues not be successful. Depending on your personal status, the typical place to begin is by trying to do a loan modification, whereby the bank will agree to modify your existing loan terms to create a monthly mortgage payment that you can afford. Some of the conditions for a loan modification are as follows. Typically, to be considered for a loan modification, you must be unable to afford your current monthly mortgage payment. This could be the result of a sudden hardship, such as a loss of employment or family death. Another cause could be an increase in your monthly mortgage payment due to an interest rate increase. Your inability to get refinancing is another possibility. Whatever the case may be for not qualifying for new financing, you still have an opportunity to work it out, regardless of your credit position. Being substantially behind on mortgage payments is also irrelevant when doing a loan modification with your existing lender. Let's take a look at how to begin. Doing a loan modification is similar to that of processing a loan package for a new loan. We will need recent pay stubs, last 2 months' bank statements, 2 years' W-2s or tax returns, a copy of a current mortgage payment stub, and copies of any correspondence that you have from your lender. We will also need a letter from you explaining your hardship with whatever supporting documentation that you may have. Once you provide us with this information, we'll put together a package with supporting documentation to substantiate the modification of your loan. We'll be researching the market conditions and providing calculations regarding qualifying ratios, along with an analysis pertinent to the decision-making by a lender. If this is not successful, a short sale is the next step. A short sale is the sale of a property whose loan balance is higher than the market value of the property. This process will involve the cooperation of your lender when a contract is received. This is a good alternative since it will show your efforts to work it out with the lender and will save the costly process of foreclosure. Another reason for a short sale is that you may be able to remain in your property for a greater length of time, since lenders would much rather have your property sold than proceeding with a foreclosure. An empty house is also much more difficult to sell in most cases. The next step would be a deed in lieu of foreclosure. This option could be a consideration should the previous options prove unsuccessful. Again, participation would forego a foreclosure, and it will likely be viewed more favorably by future creditors. It shows that you made an effort to resolve your mortgage. As bad as things may seem, participating to resolve your mortgage will help you down the line as you'll be looking to reestablish yourself. Credit is very important in our society, and every step that you take will help you. If foreclosure is where you end up, then the lender will likely exercise every option available to try to collect from you the outstanding balance from your mortgage. This could include wage garnishments and repossessing other property that is titled in your name. Should you allow the foreclosure to be executed, life will likely become increasingly more difficult, as the lender may seek out all remedies available to take your money. This will leave you with one other option: bankruptcy. The bankruptcy process could delay a foreclosure and give you time to reorganize should you take that option. Another option of bankruptcy is to simply have all your debt discharged and give you a fresh start. The thing to remember is that while you're given a fresh start without any debt, you will also be moving forward without any credit for an extended period of time. We highly recommend that you consult with an attorney to learn more about your options. Thank you for taking the time to view this presentation, and should you wish to give yourself an opportunity, call us today. We are America's affordable way to move.